Good day, students, and welcome to the Matric Hub YouTube channel. And today we'll be focusing on grade 8. We'll be focusing on grade 8 EMS September revision test. September revision test. So without wasting any further time, let's go into question 1. So let's go into question 1. So question 1 states, match each of the statements in column A with the terms in column B. So we match the statements in column A. So this will be your column A with the terms in column B. So this will be column B. Write only the letter next to the number on the booklet. So they'll give you a booklet to answer your questions. And this is basically how you will answer your question. So you'll say 1.7 G, 1.7. So for example, you say 1.7 G. So that is how you will answer your question. That is how you will answer your question. So without wasting any further time, let's go to the first statement. So the first statement says, state the main business activity of a closed corporation. State the main business activity of a closed corporation. So is it A, expenses? Is it a B, accounting equation? Is it C, sole trader? D, founding statement? E, board of directors? Or F, private and public company? So the answer will be D. The answer will be D. So now let's explain why the answer is D, right? So let's explain. So you'll write it like so, 1.1 D. So you don't need to write founding statement. I'm just writing it for you to get a closer look. So you don't need to write this part, founding statement. You don't need to write this part. You don't need to write this part. All right? So let us now try to figure out what is a founding statement. What is a founding statement? So basically, a founding statement is a document. A founding statement is a document used, when registering. So it's a document used when registering a close corporation. So it's a document used when registering a closed corporation. And what does it do also? It also states the what? The main, it also states the main business activity. It also states the main business activity. So a founding statement is a document used when registering a closed corporation. This is your part of your type of ownership. So it's used when registering a closed corporation, and it states the main business activity. It states the main business. So let's go back to 1.1. What does 1.1 says? It says it states the main business activity of a closed corporation. So when you look at the definition of a founding statement, it matches 1.1. Hence, 1.1 will be D. So 1.1 will be D. All right. So let's go to 1.2. So 1.2 says stationery, consumable stores, and advertising. So what are these? So basically they're asking you, what are these? What is stationery, consumable stores, and advertising? All right. So when you go back to column B, now you need to find the term. Is it A, expenses, B, accounting equation, C, sole trader? So we are already done with D. So we are done with D. We don't need to go back to D. And E, board of directors, then F, private and public company. So your answer will be A. So your stationery, consumable stores, and advertising are expenses, right? So again, let's quickly go and define what an expense is. So let's quickly go and define what an expense is. So 1.2 will be A. As I said, you don't need to write the word expenses. I'm just writing it for the sake of explaining. So what are your expenses, right? So expenses are operating costs. So expenses are operating costs of a business. So what does operating cost means? It means that within the production process, there are certain things that you need to buy or purchase, or you need to pay for the business to operate, or rather for a product to be produced. So these are what you call now your operating costs. So an expense, or rather expenses, are operating costs of a business that gets incurred. That gets incurred, so to run a business. So to run a business, or its activities, or its activities. So these are basically what? So these are basically the costs, or other expenses, that now you need to pay for in order for your business to operate. And now let's go back to 2.1. What does it say? So you're going to need stationery to operate a business. You're going to need consumable stores to operate a business. You're going to need advertising. You're going to need to advertise your business in order to operate your business. So these are what? Your expenses. So these are your expenses. And then 1.3, it says a team that manages a company. A team that manages a company. So don't mind the spelling, it's manages, not managers, right? So a team that manages a company. Is it A, expenses, but we're already done with expenses, so we know you don't need to repeat. Is it B, accounting equation? C, sole trader? We are done with D. Is it E, board of directors, or private and public company? So a team that manages a company are what are called your board of directors. So let's quickly define what board of directors are, or who are the board of directors and what do they actually do. But as they said, what do? They manage a company. So your board of directors, they do what? They manage your company. So 1.3 will be E, being your what? Your board of directors, being your board of directors. All right. So what are, or rather, what is the responsibility of your board of directors? So the responsibility is to manage the overall operations. So basically, who are the board of directors? You'd say people. So board of directors are responsible, people responsible for managing, people responsible for managing the overall operations, people responsible for managing the overall operations of a business. So they see to it that expenses are paid. They see to it that the wages are paid, people are paid, there is income, the business is actually moving forward. So they manage the overall operations, and they make strategic decisions. They come up with ways on how to make, or rather improve the business. They make strategic decisions. They make strategic decisions. So basically, your board of directors are the people responsible for managing the overall operations, and they make strategic decisions. All right. So let's go back to 1.3 and confirm our answer. So they say team that manages a company. So when you look at the definition, it coincides. It's one thing. So people responsible for managing the overall operations. So 1.3 will be E. 1.3 will be E. And then 1.4, it says assets equals to owner's equity uh, plus liability. So what is this? So when you look at your column B, you'll only find that there's only, so when this is an equation, as to say, right? This is a basic accounting equation. Assets is equals to owner's equity plus liability. So here you have it. It's an accounting equation. All right. It's an accounting equation. So 1.4 will be B. 1.4 will be B. So looking at 1.4, so now we have our answer B. 1.4 B. So what is B? It's basically A is equals to O E plus L. So it's assets is equals to owner's equity plus liability. So this is your what? This is your accounting equation. So it's a basic accounting equation that shows the relationship between assets. Here are your assets, your equity, your owner's equity, and the liabilities. So basically a basic equation showing the relationship between your assets, your owner's equity, and your liability. All right. Basic accounting equation. It's a basic accounting equation that it shows the relationship. It shows the relationship between what? Between your assets, your equity, meaning the things that you own within a business, and your liabilities, your debts, your liabilities. So let's go back to 1.4 and check. So it says assets, owner's equity plus liability. So that is basically your accounting equation. And then let's go to 1.5. Let's quickly go to 1.5. It says raises capital by selling shares. Raises capital by selling shares. So now we are done with A, we are done with B, we are left with C, which is sole trader. And then we are left with F, which is private and public company. So it can't be C, it can't be sole trader. So it's F. So when you raise, or rather companies that raise capital by selling shares are your private and public companies. So 1.5 will be F. 1.5 will be F. So let's quickly go and write it there and explain why is it F. So why did we choose F, all right? So there you have it, 1.5 F. And what is F? It's public and private company. Public and private company. Public and private company. All right. So basically what you need to know about companies is that they raise capital by issuing shares to shareholders. Like for instance, in a public company, they will put their company on the stock exchange, or rather they will publicize their company, whereby the public, or rather the people, can purchase shares in order to own a certain portion of the business. Whereas in a private company, they will sell their shares privately to maybe family members or colleagues or friends. So the difference is that in a public company, shares are sold to the public, whereas in a private company, they're only sold to a certain number of people. However, the less to raise capital, for a business to raise, or rather a company to raise capital, they need to sell their shares. All right. So basically, companies raise capital. They raise capital by doing what? By issuing, by selling per se, by issuing, or rather selling their shares to shareholders. So as soon as you have bought these shares, now you become a what? You become a shareholder of that particular company. All right, you become a shareholder of that particular company, right? So let's go back to our column A, and it says 1.6 suited to informal traders and retail stores. Suited Two, informal traders and retail stores. So what does it mean? It means that basically these are not people that are necessarily registered with Companies Act. So they are not necessarily registered. These are the people that decided to just start a small business, a small market, just to start selling so that they can make profit. All right? So that they can make profit. So that they can make profit. All right. So yeah, so who are these people? These are your what? Are your sole traders. All right. So these are your sole traders. So 1.6, let's quickly go back here. 1.6 will be C, sole traders. So let's explain it a little bit further. As I said, though, these are the people who just decided to start a business. So 1.6 will be C, which is what? Sole trader. It will be what? Your sole trader. All right. So basically, a sole trader is, or rather, it's an informal. Let's say, okay. A sole trader is an informal or small scale. When you talk about a small scale, we talk about a small business that is making a bare minimum profit, a small scale business. So they are not planning to make a large sum of money. They just want to make money to survive. It's an informal or small scale business owner. So an example will be what? It will be your street vendors, your spaza shops, your small fruits markets, your people actually who are standing by the street, who are selling products by the street. As I said, they don't need any registrations with the company. They don't need to register the business per se. So those are your small or rather your sole trader, an informal or rather small scale business, an informal or small scale business owner. So an example will be your what? Your spaza shop. Your spaza shop, because they don't need to register the business per se. So when we go back again, when we recap our answers, let's quickly recap our answers. Let's quickly recap our answers. So 1.1, state the main business activity of a closed corporation. That was D, founding statement. Stationary consumable stores and advertising, that's A. Expenses. A team that manages a company is E. Board of directors. 1.4, assets is equals to owner's equity plus liability. That will be your what? Your accounting equation, which is B. That will be B. And 1.5, raises capital by selling shares. Those are your what? Your private and public company, which is F. Suited to informal traders and retail stores. And that will be your what? Your sole trader, which is C. So that is your question one. All right. And then let's move on to question two. Let's move on to question two. Question two says, indicate whether the following statements are true or false. Indicate whether the following statements are true or false. Write only the, so this is how you write your answer now. This is how you write it. You'll say 2.1, 2.1 false or true. You just write false or true or false. All right. You just write true or false. All right. Okay. Let's go back to the question. So 2.1 says, closed corporations are still the most suitable form of ownership for persons who wants to start a business and protect their possessions. So it says closed corporations are still the most suitable form of ownership for persons who wants to start a business and protect their possession. So the answer is false. Why? Because closed corporations are no longer available for new registrations, particularly in South Africa. All right. So that should give you an idea that because now they're not available inside, that they are not the most suitable form of ownership. Remember, you have your sole trader, you have your partnership, you have your public and private companies, and then you have your closed corporation. So because of the registration, because it's no longer ownership that can be registered within South Africa, it's not the most suitable what form of ownership. So 2.1, so let's quickly write it down. So 2.1 will be false. 2.1 will be false. So you're just going to write it there. And then just to give you a statement or rather a, an explanation as to why it's false. So what you need to remember is that a closed or rather closed corporation are no longer available or rather the registrations are no longer available in where? In South Africa. In South Africa. So it's not the most suitable form of ownership, right? And if you can, or maybe wanting to add which form of ownership might be suitable, you can say your private companies, because they are the most preferred for protection or rather protection of possessions because they have limited liability. But that you learn as you go further. So you'd say here your private companies are suitable, right? Private companies are suitable. All right, so that was 2.1. So that was 2.1. So closed corporations are still the most suitable form of ownership for persons who want to start a business and protect their possessions. The answer is false. And then 2.2, 2.2 says a maximum of 50 members can form a closed corporation. So the answer there is again false. So if you remember correctly, if you have studied your notes, you'd know that a rather a partnership is the one where you can start a partnership from 2 to 50 members or partners within a business, right? So it's not a close corporation, it's a partnership. So 2.2 is again false. 2.2 is false. So let's quickly write it down. Let's quickly write it down. So you'd say 2.2 false, right? Because why? Because corporation, a closed corporation can only have a maximum of 10 members, can only have a maximum of 10 members, not 50, but 10. All right. And then let's move on to 2.3. 2.3 says premiums are the remuneration received by shareholders. Premiums are the remuneration received by shareholders. The answer is wrong. Why? Because shareholders receive dividends, not premiums. So premiums is when you are insured with a certain company. But for shareholders, they receive what? They receive dividends. So 2.3 is again false. So 2.3 is again what? It's again false. So 2.3 would say false. Why? Because shareholders receive dividends, not premiums. Shareholders receive dividends. All right, let me just quickly do this. Okay. Shareholders receive what? Dividends. All right. They receive dividends and not share, or rather, and not premiums. The shareholders receive dividends and not premiums. All right. because premiums, they usually refer to insurance. As I said, if you are insured with a certain company, then you will receive premiums from an insurance company, but not a company, or rather a public or private company, or as a shareholder, you do not receive a premium, but you receive a dividend. All right? You receive a dividend. So let's go to 2.4. Let's go to 2.4. So it says a partnership does not pay taxes. A partnership does not pay taxes, which is true. So 2.4 is true. Why? Because individuals within the partnership, they pay their share of profits rather individually. So they pay tax on their own and not as a company. So if you are part of a partnership company, you do not pay, the company does not pay tax. So a partnership does not pay taxes. 2.4 is true. So 2.4 is true. So let's quickly rub off here so that we will, or we don't get confused. So yes, 2.3, just rub off quickly. And then we go to 2.4 now. So it says 2.4, a partnership does not pay taxes, and it is true. Why? Because individuals pay taxes on their own. All right? Because individuals, individual partners per se, okay, let's say people within the partnership. So those are your partners, right? They do what? They pay tax on their share of profits, meaning the amount of money that they receive from the profits when they get paid, or rather, let's say they get paid through dividends, or they get paid through or on a monthly basis, depending on when or how they get paid. That is when they will pay their taxes. So individually, they pay their own taxes. That is why a partnership company does not pay tax. All right. And then let's go to 2.5. Let's go to 2.5. So 2.5 says sustainability would imply the continued existence of a business despite the challenges and threats it faces. So again, let's repeat it. Here it is. Sustainability would imply the continued existence of a business despite the challenges and threats it faces. So what you need to understand that sustainability means operating in a way that ensures long-term survival. So when we talk about being sustainable, we are talking, or rather we are looking at being long-term, surviving for the long term. Not say for 6 months, but rather for 2 to 3 years. So let's repeat. It says sustainability would imply the continued existence of a business despite the challenges. So what it means that will we continue as a business if we are sustainable? The answer is yes. So even if we face challenges or threats, if a business or company is sustainable, it will continue existing. So it will operate, even though it will rather lose money or capital or profits here and there. But if it is a sustainable business, it will succeed. All right. So 2.5. Let's quickly go to 2.5. There you have it, 2.5. So 2.5 is what? It's true because a business will succeed if it's sustainable. All right. So here we'll say a business will most surely succeed if it is sustainable. If it is sustainable, because sustainability means operating in a way that ensures, so let's say